All right, guys, welcome back to the Crypto Boys. Joe P is here with Bob, our accountant, right? So first off, a couple people already commented. Cody, we're not doing any burpees. Colin was doing burpees, and that is the reason why we were late. He's out there working out, so we apologize. We're a minute and a half late. So Bob is here. We want to make sure that our mouths are on real quick. We've done it before, and we do not want to do that again. Excellent. All right, looks good. So, guys, you guys know what we're doing. It is Sunday. We are never, ever live on Sunday, but you guys wanted it, so here we are with our tax dog, okay? He's an accountant. He's a CPA. We'll go over what he is and what he does here in a minute, but drop comments as we go. I mean, we have a couple comments from you guys the last week or two. You guys have been doing that, so smash up the like button, hit the subscribe, drop comments, and let's roll. So, first things first, boom. This is not any tax advice, is it, Bob?
No. Everyone should consult their own tax folks, so just take what I say with a grain of salt.
There you go. Exactly right. So, yeah, Bob is going to give you his little spin, his little opinion, just like we do with all the crypto stuff that we talk about. It's not financial advice. It's not tax advice, blah, blah, blah. You guys have know the whole thing. So, Bob, what do you do? Where are you from? Blah, blah, blah. Give us a quick little synopsis.
Yeah, so Joe and I met in college, played baseball together. We're roommates, still good buds today. So I started out working at a CPA firm doing different audits at various companies. Now I transitioned to I'm in a private sector with a public company, and I handle all of our SEC reporting and all the fun that goes with that. So for those of you that might not know what that is, that's just you have to furnish certain reports to the government quarterly, annually, with certain events happen. I manage all of that for our company. So I've had my CPA license for 6 or 7 years. So that's kind of a little bit of background on
Excellent.
my experience. And yeah, I'm from the good old 563 like everybody in here.
There you go. Yep, straight from Iowa. Half of the stuff that he just said, I have no idea what he means. You guys might not as well. And if you do, kudos to you. So that's why we pulled him on. Just like when Chase was on with all the Voyager stuff we were talking about, like they are the professionals in the space. We want their take and their spin. Nobody else is doing this right now. So we figured, hey, why not? We got the awesome access. So the next question everybody wants to know. We had a couple questions lined up, maybe 4 or 5 of them really, really important to this upcoming tax season here rolling around. And also, Bob, you're working like 12, 13, 15-hour days right now, so we appreciate you taking any time. That's why we're doing it on a Sunday, because Bob is literally working his butt off from like 4 in the morning till 9 o'clock at night. So, Bob, do you own any crypto? Because if you don't, you know, it's a different spin on it, so do you?
Yeah, I own Bitcoin. Woo! I've owned different ones throughout the space. Dogecoin I had under a penny. Sold it way too soon, but we won't talk about that.
There you go. So he owes a little bit of Bitcoin right now. You said what? You have like 6 or 7 Bitcoin just laying around in a couple wallets?
Yeah.
We all wish, right? So yeah, awesome. Cool. Very, very good. So let's just dive right into it. People are asking, one of the comments that people keep saying are capital gains tax. Now, the difference between short-term and long-term, can you kind of just touch on that and what it means like overall in like kind of the crypto space?
Yeah, so anytime you hear short-term in the context of like tax or anything like that, it just means 12 months or less. So anything over 12 months is by default long-term. Generally, you're going to get a better tax rate on long-term. They see it as a benefit. The government sees it as a benefit for holding that asset for an extended period of time, versus short term, which you're generally going to pay a little bit more. There is no fixed rate, like tax rate, you're going to get on these gains. It depends on how much you make. I mean, if you make nothing, you're not going to pay any tax. But if you make $500,000 a year, you're going to get taken to the cleaners. So.
Exactly. Yeah, it's can you guys hear him, by the way? Drop some comments just to make sure, because we're switching around with the mics, making sure that it sounds good. Can you hear me at least? Yeah, short term, from my understanding, is going to be a little bit of a higher percentage just based off of whatever your tax bracket is. Longer term, you hold it for a longer period of time, you're going to get taxed less. So that's good to know for sure. So if you're holding on to this crypto and you're day trading, you're going to get a bigger taxable event more often. So All right, 88
Right.
saying it's good. Never quit. What's up, my man? Drop comments if you guys got it. We appreciate you guys being in the chat. I'm going to be kind of reading through the chat as we go, so drop them down below. All right, let's see. Also want to talk about realized and unrealized gains. Very important because there is a very distinct difference between the two of them, and it's very helpful to know what it sounds or what it looks like. So why don't you kind of spit some info at us about that?
Yeah, so really any investment can have unrealized and realized gains. So it's not specific to crypto by any means. Realized is you realize the transaction, so you sell anything you've bought. That's when you actually realize it. That's when you're getting money. You're recognizing that gain. Unrealized just means it's on paper. You know, if you look at, to put it in a simpler context, if your 401k went down with the market this year, well, that's a unrealized loss. You don't realize it until you actually take the money out. It's really as simple as that. Like the unrealized piece does nothing for you. It's not a taxable thing to worry about. It's literally just on paper.
So if you're looking at your crypto.com account and you see that you're down 90% in all of your projects, but you haven't sold a single one, you're still good. You're unrealized gains, no problem. It's not a taxable event. You're just down right now.
Unrealized loss in that situation, but it does not matter until you actually sell, or if you traded it, then you're again realizing it. At any point when you don't have recourse or you can't, it's no longer your asset, that's when it changes to realized.
Exactly. And one of the questions actually was something we were talking about right before we hopped on was there's really two taxable ways in the crypto space. One is selling, and I believe the other one is if you trade coins. Is that correct? Like if you go from Bitcoin to Dogecoin or whatever, that's taxable as well, correct?
Yeah, so that's that space. It's called non-monetary exchange. There can be a lot of benefits to it. For the sake of my limited knowledge in that space, that gets extremely complex depending on what you're trading. Is there cash going into the deal? That's something you definitely want to hire someone that like does that for a living. There are people, firms that's all they do. But yeah, it's definitely, if you trade someone coin for coin or anything like that, like that's an event that if you don't report it can cause you some problems down the road.
For sure. Yeah, that's one of the big things too that we want to talk about is like the crypto space is not what it was in 2009. It's not what it was in 2010 or 11. Like it's not just like the black market anymore. Like the IRS knows what's going on. Like they're tracking shit left and right to where these need to be brought to light. Like if you're trying to hide this, you're gonna get in trouble.
Right, and I mean the IRS and the government's come out and said they're gonna focus on folks that have these crypto transactions. So, when the IRS comes and does these audits on individuals, they're focusing on people that are making over six figures generally. That's a red flag for them. But then if you're going to add on the fact that, you've got a bunch in a crypto portfolio and maybe you've made several trades where you're realizing these gains or losses, they're definitely going to, it's a red flag for them to come knock on your door. And they might not knock this year or next year, but the window is there for them to come look at your stuff, and it's a red flag. Exactly.
Yeah, exactly right. And like you said, it might not be this year, but they might, transition and get better at what they do. And, a couple years down the road, they might be like, well, in 2022, you bought a bunch of shit and sold it and you didn't tell us. So now you're in trouble. Speaking of which, what about like deductions? Okay, so one of the questions that somebody had was a great question, actually. I have the same thing. So if you have sold something earlier this year, capital gains, you're at a win, you sold some real estate or something like that, took that money, rolled it over into Voyager. As you guys know, Voyager Chapter 11, Bob knows about it. I mean, he's not even in the crypto space super deep, but he's heard about it. Voyager Chapter 11, and so they're going under. They're in trouble. They got stuff going on. They're trying to figure everything out. However, if your money that you had from your capital gains earlier is stuck on Voyager, can you take that as a haircut, as a loss? Like, what are your options at this point, I guess, because we're falling into this now. Like, what do we do?
Right. Yeah, it's, again, very specific to your situation. It's important to realize what Chapter 11 is. It's a reorganization in courts. The courts have to shoot it down before they go to full-blown Chapter 7, which is liquidation. Personally, I would do nothing with it until you see the outcome of that Chapter 11 proceeding. If they do successfully reorg, personally, I think everyone has a great chance of getting most of their investment back. It might not be quickly or timely, but you have that opportunity. So let's say they don't get through Chapter 11 and you're like, well, shoot, what am I doing? So you can basically abandon or take an impairment loss on those crypto assets. You can deduct, I think it's $3,000 against capital gains with that investment loss.
There's a max, correct?
There is, and
Okay.
it might be different if you're single or filing jointly. I don't know that off the top of my head. But once you take this loss, you abandon the asset, meaning you have no future right to it. So let's say you abandon it today, and then they come through Chapter 11 successfully, and they want to give you your guys' money back. You no longer have a right to that. So if Bitcoin goes to $1 million in the next few years, and you took that loss at $20,000 on it, you're SOL. You have no right to that income going forward. So I'm sure there are other options out there, but that's what a lot of people are talking about. And since it's such a deregulated space, I mean, I'm sure there's some creative tax solutions out there.
Yeah, I know that there's specialists that kind of specialize. I've never heard anyone talk about the abandonment thing, so that's very interesting. I would not do that. I don't think that's the best option in this specific situation, but just know that it is an option. And also, if you guys like Bob's beard, because it's looking pretty good and thick right now, smash the like button for Bob. We appreciate him being on.
Get the mustache going.
You do have a thick mustache, too. I will give that to you. So again, couple other comments, couple other questions, guys. One of them being on your taxes, I guess. So you pull up, you go into Mr. Joe Schmo Tax Accounting, and you walk in there and say, hey, I got some crypto. How specific do you have to be? Like, let's say, for example, I bought Cardano 10 different times throughout the course of this year. I sold a little bit here. I bought Bitcoin. I bought Ethereum. Like, I'm DCAing every other week, like we kind of talked about on the channel here. Like, do you have to tell your accountant guy exactly every transaction, or like, I put $3,000 into crypto this year? Like, what's your take on that?
Yeah. Any sales and purchases, yeah, I would keep track of. That's how you're getting your basis on those. So that's where you're establishing at what point it's taxable. Excuse me. So I think it is important you track those. I think a lot of places will send you a statement if you request it of all of your transactions. But yeah, if you just tell them I put $3,000 in, whatever this year, that does nothing for them.
So you need to do every single transaction, pretty much. That's what it needs to be, and it's time consuming. It's specific, but if you do this throughout the course of the year, kind of like we've been talking about from the beginning, it makes it significantly easier. So if you're like, oh shit, I did a lot this year, you're gonna have to go back to all of your transactions, which should be on your account. It should be on Voyager. It should be on Crypto.com. It should be on wherever you trade. Every single one. And it's a pain in the butt, but you kind of got to do it.
I mean, you can estimate too, like your tax folks they'll be okay if you estimate it for like, oh, I bought it at, I don't know, $100 roughly, and realistically you bought it at 95. Like, you're not going to be under, like, if you get audited by the IRS, it's not going to be a huge ordeal.
Mm-hmm.
But if you just don't report it, or you just say, I don't know, you got it for $100 and you really got it for $1,000, like, there's going to be problems
That's
down
a
the
big
road
deal
for you.
for sure. Well, and to be honest with you, Never Quit had a good point. Most exchanges, you can find that information like at the year end or tax time. There's usually a document that you can just straight up pull up of like, here's all your transactions. So it's really, really nice. I know that there's software out there now. I don't know exactly into the names, but you can put all of your wallets in there and it'll give you all the transactions you had, which is actually pretty sweet.
Pretty cool.
One other question was, if I just bought and I didn't sell anything on Voyager, do I still have to report that? If you just bought crypto, didn't sell anything.
No, I don't think so. It doesn't it doesn't create a taxable event.
So you don't have to tell your accountant that you bought 1 Bitcoin and just left it there.
No, I mean, I'm sitting here. I don't do my own taxes for the standpoint that I want someone else to look at it.
Sure.
And I tell my tax accountant nothing about any of my crypto holdings. It does not matter because I don't sell them frequently. I think what I've had in crypto now I've had for well over a year and I have not touched it. So no, it's not important. If you've just bought, that's just for your eyes only.
Gotcha. Okay, so Never Quit's bringing up a question here. So just to make sure I got it right, it's best to wait until we get whatever we get back, then deduct whatever the haircut was. This is the Voyager, the Chapter 11 situation. So, and again, guys, Bob's here to kind of help us out with whatever he possibly can as a CPA, as an accountant. He is not a tax professional accountant, but he has knowledge in the space. He had to go through all the tax shit to become a CPA. So, he does know quite a bit about it. So what's your take on that then? And again, like, if you don't know, that's fine. I mean, it's up to you guys to figure out with your accountant specifically, but
Right.
This is just what a quick little thought.
Yeah, I personally there's no like look back, so just cuz like the bankruptcy proceedings this year doesn't mean that you need to make that decision this year. You can wait until this thing plays out. I imagine it's going to take a bit of time for it to play out. With it being such a large exchange, and I think there's a good chance it does come out of Chapter 11, and you guys get something back, maybe all of it. So, yes, I would wait and then make that determination down the road. Another thing that I should have mentioned earlier when we were kind of talking about that abandonment of the asset. So let's say you can only deduct that $3,000 I mentioned each year, and again, it might be more for filing jointly, but you can carry it forward up to 3 years. So if you lost 10 grand on with Voyager, and you could take 3 this year, you could carry 6 more forward and take it against other capital gains as you move forward for the next couple years.
That's definitely good to know. I mean, that's something I had no idea of, so I'm jotting that down. I'm probably going to go back and watch this thing actually to try to listen to your words again.
Yeah.
Colin actually from in the middle of doing burpees just commented, "Hey Bob, what's your thought on accountants actually knowing how to account for crypto taxes because it's relatively newer? More accountants don't really like to touch it," which is my personal experience. I'll be completely honest with you. When I went to my guy last year, I told him, I was like, "Yeah, and I got this little business, I got this LLC, I got this crypto stuff," and he's like, "Oh, you're one of those guys then, huh? You're gonna make it difficult for me." I was like,
Yeah.
yes, I it's your job. I hate to say it, but like,
Right.
what's your take on that?
Yeah, I mean, you'll see a lot. I mean, I know. Let me relate it. So when I was in a CPA firm working for a firm, and like this was during the time where marijuana was becoming legal in a lot of places. It's still not everywhere. Our firm leadership was saying, we're not going to take audits on of companies that sell, house, produce marijuana. Obviously, it's a huge growing business. There's a lot of money to be made from, that company's standpoint, or as a vendor or consultant to that company. I think crypto's in a very similar situation right now, where it's still so new, and the fact that it's so deregulated that companies are just scared to touch it, but not impossible, because you're seeing some of these huge companies now, these Fortune 500s. Some of them are carrying it on their balance sheets.
Yes.
And they don't care because it's paper. They're not selling it. They take these losses, and it's just on paper. So you might see, I'm trying to think of an example of who had a lot. They took a huge write down when Bitcoin's kind of regressed.
Yeah, Michael Saylor with MicroStrategy.
Yeah, so they've taken a big write down, but it's just on paper. I mean, it doesn't matter to these large corporations, and I think as you see them continue to hold these assets, you'll see some more these smaller firms, or you might just have to go to a larger place. I don't know.
Sure.
I don't know who you use for your taxes, but maybe you'll have to go to like a H&R Block or go to like an actual CPA firm. That, I mean, you're gonna pay way more to get your taxes done, but
it's worth it if you don't go to jail.
Yeah, if you've got a lot of money in these things,
for sure.
It might be worth the extra couple $100 you're gonna pay.
Well, I know that there's a guy on here that's in the chat pretty frequently, and he lost over $300,000 in Voyager. His sister lost a shit ton of money too. So there's a lot of people losing a lot of money. I'm sure they're probably gonna want to figure that out. One comment here, B Miles saying, just to mention capital gains and loss, you can carry forward for 3 years. They can be carried forward indefinitely, actually, until neutralized against capital losses and gains. That's good to know. I don't know if it's true or not.
I know. So there is a period of time you can carry back and carry forward. Again, I'm not in the space every day, so look it up. I would not doubt that you can carry forward indefinitely. I do know that they can go forward and back, so definitely something to look into.
For sure. Yeah.
Appreciate the comment.
Absolutely. See, there you go. Look it. Bob might have a YouTube channel after today. He's loving it. Couple more minutes, guys. We will continue to roll. We got a couple other things to talk about. So I guess my other question to you, Bob, is the markets are crap. The regular, I mean, your 401k is probably down a lot. Good thing you're not retiring right now. I know you're buying a house or building a house, so
right.
that's a little stab in the heart. But are you going to be buying more crypto?
Yeah, I honestly think right now it's tough, to call the bottom of the market. I do look at the markets a lot, but to call the bottom is a very tough thing to do. Those that do call it right probably make a lot of money.
Right.
So, no, I think especially at our age, I think it's a great time to just continue to buy. I mean, things just don't go down to zero, and it'll go up eventually. It might be a couple years.
Well, some things do go down to zero, especially in the crypto space. But if you're in the top 50 projects, I mean, if you're buying Bitcoin, if you're buying, things like that, Cardano,
these
the
super altcoins that that are going to be
low cap gems is what we call them.
Yeah. That's good.
The low cap gems,
micro caps.
Exactly. Yeah. If you're buying lots of those could go to zero. However, you put a couple grand in those bad boys might 100x on you.
You could also just retire in a year. So
that's right. Let's see a couple other things. This is I don't know if you'll know this question or not, but and possibly possible saying, how are airdrops taxed when they're received? If you sell them as a short-term game, what is the real amount you'll be taxed? So airdrop is like if you are in a project or staked or in the right position or whatever, in the right spot, they will just drop a certain amount of crypto or coins into your wallet. Like, thanks for being a part of such and such. Like, thanks for joining us for this thing. Here's a couple tokens. It's basically a free token that if it does appreciate, you can sell it. A lot of people get massive airdrops and they just dump it right there. So it's worth, I don't know, $4 or something like that, and they get 10,000 of them airdrop to them. They just dump it right there. Like, stuff like that has happened. So I'm gonna assume that it's the same thing as the short-term capital gains, but I don't know. Maybe take your spin on it.
Yeah. So if you're getting, I'm this is a new term for me. So again, you're gonna want to talk to your own folks about this. But in my opinion, it kind of sounds like if you're gonna dump this as soon as you get it, your basis is what you got it at. So there's no capital gains to report, just your ordinary tax on it. Which, if you're getting it, it's free money. What do you care if you're owing some tax on it? It's still money in your pocket.
Sure. Yeah, and that's a tough one too, because the airdrop thing is a real weird game that only crypto people would understand. So moving on here. 88 says, can we ask what an accountant like you invests in? He's a big gamer, so probably video game stuff.
No. I don't know. I don't do a ton of personal investing. I think to do it and do it well, it's almost a full-time job.
For sure. And even if it's a full-time job, you might even not beat the market.
You still could. Yeah. I mean, there's people that do this. There's whole firms, thousands of people that do this every day, and they might outperform the market by 1%.
Graham Stephan, you know who Graham Stephan is? Big on YouTube, big investor, did real estate for a long time. Now he does basically YouTube videos. Awesome dude about like financial stuff. He did something last year. It was like in November or something, and or maybe it was the year before. Either way, he had a monkey pick 10 stocks that he put $10,000 in each of them. So he spent $100,000. He beat up 40% on all of his. I mean, he was at $140,000. Right. Let it just sit in there. Didn't take any profits. Down a ton now, of course, this year. He did the same thing this last year, and he's down like 30%. So he's like, monkey beat the market for a little bit of time, but realistically, for you to do that, it's impossible.
Yeah, to do it on a short term like point of view, it's very challenging.
For sure.
Some things that I have like personal investments in, I have some fintech and like some tech companies in general. I think those are, you're just going to see the economy continue to become more efficient, where you're going to see human capital go down in a lot of these companies, and they turn to these tech and financial tech companies to fill that void. So I think those are safe. I mean, they're no different right now than the market. They're down, but I think as we come out of this challenging environment, you're going to see some of these companies really explode. Yeah, no, I agree with you, definitely. Tech is an interesting one to almost hedge other stuff against, but I think it's going to outperform many other things, which is why I'm in crypto, of course. Colin is saying he's going to retire on Silo, which is one of his small cap gems that we have. He has a lot of that. I got to take what Colin says with a grain of salt.
He also said, and I do think this might be a piece of the puzzle, is that for the airdrops, he thinks that they're taxed once they are dumped, so at the price that they're dumped at.
Right, and what I said is if you dump them basically like at the same time you get them, there is no difference. So you're not going to pay capital gains on it then, because there is no gain.
I got you. 88 saying you own a Tesla, don't you, Bob?
Yeah, I saw that. No, I don't. Thanks. Appreciate that.
He looks like a big Tesla guy, though, doesn't he?
Yeah. Nope, not a Tesla guy. He probably drives a Honda Civic or something.
That's awesome. Okay, cool. Well, like I said, we'll stick on for another couple questions or whatever else, but is there anything specifically that we didn't touch on with like taxes or crypto taxes or anything like that specifically that you want to get out, or any ideas there? Putting you on the spot there for sure, but if not, no big deal.
No, I mean, I think you covered the big things. I mean, the chapter 11 with Voyager is just a challenging situation that's very unique, so just for those of you that have real money in it, that's something to talk to people that do this every day and make a lot of money about.
For sure. Yeah, no, I love it. Well, we appreciate you being on. I know you guys had questions on it as well. So hopefully we answered most, if not all of those questions. I don't see any other YouTube channels doing this right now, bringing on professionals like this, like Chase and like Bob. So if you appreciate these guys taking time out of their day, you know what to do. Smash the like button, hit the subscribe button as well. I think that's it for Sunday. Nice little Sunday get together. So we appreciate you. And thanks, as always, for rocking with the fittest crypto channel on YouTube. We're out.
Thanks, guys.